Hello and welcome to our Street View episode for October 2018. Today we're going to be talking about some of our new listings for the fall market, as well as our next charity event, an absolute comedy fun night out. And we're going to be discussing what's going on in the Toronto real estate market. Lots of great insights to share, so come on, let's get going. So let's kick things off with talking about some real estate. We have two new listings that have just come out this week. The first being a move-in ready 3-bedroom home in the heart of the Rouge Valley neighborhood. Yes, it's the second one that we're doing out there. We love that neighborhood and it represents such a great value for the right buyer. So be sure to check it out. It's a fabulous property. And number two is the property I'm at right now, which is the affordable penthouse unit in Scarborough Bluffs. It's called Haven on the Bluffs. And it's actually launching right now. So you guys are getting a sneak peek at what it really looks like on the inside. We just got occupancy for the unit, inside pictures and all that sort of stuff. So we're super excited to be showing it to you. Next, we want to share details of a charitable event, a fun night out at Absolute Comedy. Madeline and I are members of the East York Rotary Service Club, and we support many local charities in Toronto's East End. And this is a fundraiser and a fun night out. On Thursday, October the 25th, starting at 7 p.m., Absolute Comedy is at Yonge and Eglinton, so very central, close to Subway, so you don't have to drive. The festivities start officially at 7:30, and it finishes by approximately 9:30, home by 10. There you go. If you'd like to be a part of it, please just email or text me. Madeline and I, we already have about 10 people coming so far, and we'd love to have you join us and be a part of the fun. And the monies go to a very worthwhile organization that helps so many people in Toronto's East End. And now the real estate update. The supply plus demand equation, the supply is equated to the number of new listings. And as this chart will illustrate, we can see how the orange bar representing 2018 is very much head and shoulders with the yellow bar that represents 2017. So that represents actually a 3.1% decrease. You can see it's just a little bit shorter than the prior year. And those other two bars represent 2016, 2015, so that we have a broader perspective on what's really going on in the market. I would say that this is seasonally normal, and we can see how we come out of the summer months where the number of new listings dips down because everybody's enjoying summer. But then when the kids go back to school, everybody gets focused on, if we're going to make a move, we're going to get it done before the holidays. So there's a lot of activity that happens September, October, November, before we can see how December is going to taper right off. So right now, number of new listings, seasonally normal. Looking at the demand side, the number of sales for the month of September 2018, they were up 1.9%. And you can see how the orange and yellow bar are very, very close to one another. But you know, when you look at that orange bar as it's been trending throughout this year, it's been classically lower than any of the preceding years. And so what does that mean? It means if I add up all the sales that have happened throughout the entire year, that comes to a total of 60,000 sales out of potentially what we normally have between 90,000, 100,000 transactions in a given year. So we're trending in the right direction, but how does that compare to last year? Well, last year at this time, there were 73,000 transactions had taken place. And when we compare the two, that equates to a 17.9% decrease. So that means there are fewer people that are moving. Maybe there's less speculation going on. Maybe people are holding off on things. Affordability we've been talking about has been seriously eroded. Prices continue to climb and interest rates go up, so there's a bit of a double whammy there. But you know, the demand is such in Toronto that it just keeps on trucking. It's just that the first-time buyer segment is really struggling. And I think those folks are the ones that have stepped back from the process the most, I would say. Many other people that are in the homeownership ladder are doing moves because they have growing families or shrinking families, job relocations, those primary reasons for buying and selling. So maybe the speculative part of the market is maybe down a little bit. We shall see over time. But right now, it's a very stable and balanced market. And so what are the results? Average price is up 2.9%. Once again, representing a very balanced and sustainable market, I would say. And we can see how that orange bar has been trending above the yellow bar, quite frankly, above the preceding years since the month of June. And that's a trend that we expect will continue right through to the end of the year. The correction or the run up in the market that you can see in April 2017, that yellow bar there is sticking way up. We're slowly working our way back up to that level. I don't think it'll be achieved in this year coming, perhaps the following year. I think growth is going to be modest in the coming months because of interest rate changes and affordability overall. But to understand that matrix a little bit better, we need to have a look at the detailed price. So looking closely at the number of sales and the average price that's been achieved across the different home types that are available in the GTA, and there's a breakdown for 416, 905. We want to take a specific look at detached homes, which is the top row. And we can see 3 columns in, we can see the total number of sales for detached homes, 2,800. Those are the most popular home types in the Greater Toronto Area. Number 2 would be condos that are just a shade under 1,800 transactions. So, you know, detached homes are by far the most popular housing type in the GTA. And when we slide all the way over to the right, we can see how average price is correlated to that. That, you know, the average detached home is a little over $1 million, while a condo apartment is $570,000. Interesting, right? It's almost twice the price in rough math. But now let's look at how they're growing year over year in terms of appreciation, price growth. And we just slide down to the bottom half, and we can see how detached homes have actually have gone down 0.6%, while condo apartments have gone up 10%. And so, you know, it illustrates this idea that the lowest grows the fastest, meaning that, you know, if we were to plot out average incomes for the Greater Toronto Area, there'd be more people at a lower end of the spectrum than at the higher end of the spectrum. I think you could understand that. And what that means is there are more people in the market that can afford a home at $570,000 than there are that can afford a $1 million home. And once again, that's purely understandable, logic, basic, right. But it's interesting how year over year that dynamic is continuing, and it's been continuing strongly for the last 6 months. And because interest rates continue to go up, because mortgage qualification processes get tighter, this means that it's becoming harder and harder for first-time home buyers, as well as people wanting to move up into bigger homes. And where's the concern in all of that? If I were owning an empty nest home, I'd be thinking, you know, it looks like price growth is pretty flat, and it might be time to pick your exit strategy. If I were a first-time home buyer, I'd be doing everything possible to just get into the market wherever I possibly could and get into that very first condo apartment and be a part of this growth. If I'm in a condo and I'm a move-up buyer, if I'm growing a family, as it were, you know what? You guys have got a great spectrum of choice. If you own the condo apartment, great. It's been appreciating quicker than the house that you might be going after down the road. So I think it's an encouraging market for everyone. It's a very balanced market, and it's very much more sustainable than what we had in the past. And I must say that it is probably one of the best markets I've seen in the last 11 years I've been doing real estate. And, you know, it's just because we've gotten to this place of stability. We have a free trade agreement with the U.S. that's pending in November. We have relatively a healthy economy. There are certainly some risks, but the Bank of Canada raised rates in the summer, and that's the 4th one they've done since May 2017. I don't know if you knew that. It's gone up a 1/4 point, and this is prime interest rates. Have gone up a 1/4 point 4 times in about a year and a half. And what are they forecasting? If we get the free trade agreement all settled and we continue to have some strong indicators with GDP and all of these other things and unemployment being what they are, you know, interest rates are going to continue to go up, and prime rates, fixed rates are kind of connected, and, you know, it's all going to just continue. And so I think that, and it is what it is. I think it's good for everybody, and it's certainly sustainable and much better than what we had in the years prior, where we had this crazy growing market, because it really created a lot of uncertainty and speculation in the market, which is unsustainable and causes boom busts. And right now I think we're very much on this long road of steady growth. So we'll see how that one plays out, see if I can forecast that one correctly. But anyhow, I want to thank you for watching, and I'll look forward to speaking to you again next month. I'm Matt Emerson of RE/MAX Hallmark, Emerson Group Realty, and we're never too busy to help you navigate your own journey. Thanks, and have a great day.